Welcome back. Well, Vinati Organics, that's the next company on our radar. The performance was largely in line, but what's the way ahead? That's what the street would like to know. Well, we're joined by Vinati Saraf Mutreja, the Managing Director at Vinati Organics. Hi, Vinati. Good morning, and thanks a lot for joining in. Well, let's focus on the largest part of your business, the ATBS segment. What kind of volume and revenue growth are you working with for this year? And you had an expansion that was due, right, at the first half of the year itself. I think in the first quarter, it was expected to go live. Could you tell us if that is on target, and how do you see capacity moving up as well from here on?
Yeah, absolutely. So this year, a large chunk of our growth did come from ATBS. Last year, there was a bit of tightness in demand for ATBS, which we saw improvement in FY25, and about 25 to 30% volume growth is what we observed in ATBS. Going forward, I'm expecting a similar growth. As of now, we are running at full capacity. And just to address that issue, we are adding two new lines of ATBS, in fact. The first line is expected to commission in Q1, like you rightly pointed out, and we should have some added capacity to fulfill the backlog in demands starting from July this year onwards. Post both the lines in completion, our total capacity of ATBS would have expanded by 50%.
Okay, would have expanded by 60%. Vinati, hi, good morning. Prashant here. Could you talk to us a little bit about the core demand and how that is shaping up? Give us a breakdown in terms of volume and pricing both.
So, demand largely for all products has been good in our case. Mostly, again, ATBS, a large chunk of the application that is growing is coming from the oil recovery segment. ATBS, as you know, is used in oil field and oil recovery polymers. We also see a strong demand coming from water treatment and mining industry. My other products, such as the antioxidants, which has grown by more than 50% this year, which goes in the polymer industry. We've seen a very strong demand in India as the polypropylene and polyethylene capacities have increased over the last 3 years. Again, butyl phenols being a feedstock, even that plant we are running at close to 90 to 100% capacity. We are increasing our isobutylene capacity, which is used in agrochemicals as such in cypermethrin. So demand remains positive and strong, and a lot of it is coming from the domestic sector.
Okay.
You know, you mentioned that you're working on 3 to 4 new products, which will drive the next leg of capex, and these are all based on adjacencies. I mean, with your existing products, could you talk to us a little bit about this? How large are these product segments?
Yeah, so a lot of the new products we are adding in the subsidiary, Viral Organics Private Limited. We are adding a polymer inhibitor. We're adding a product that's used in the pharmaceutical industry. We are adding isoamylene-based derivatives, which go into agrochemicals as well as plastic industry. PTAP is specifically the product. Now, as such, each individual product has a revenue potential of about 100 crores, but total, the basket of 5 products, the total revenue potential becomes 500 crores at full capacity utilization.
Okay, all right. Vinati, give us a few more details. You know, the antioxidants as well as the butyl phenol. If I got it correct, I think it's around 20-25% of your mix. You could correct me on that number. But for this year, I believe, you're guiding for bigger numbers. So between the two, what kind of revenue number could we see between these segments?
Well, you're right. This year we did about, combining the two, we did about 550 crores in revenue. Next year, this number should cross 700 crores, but that will still remain about 25% of our total revenue, as the growth will also come from ATBS and the new products that I talked about previously.
All right. So for the company on a consolidated basis, what kind of a revenue growth should we look at? In the last quarter, what was positive was your margin surprise. What is the steady state margin range we should work with?
Yeah, so, on a long-term basis, I think over the next 3 years, 15 to 20% annual revenue growth is a fairly acceptable, achievable number. Margins, again, I would expect EBITDA margins to remain about 26 to 27% on average. This quarter, you might have seen slightly expanded margins. That depends on in the quarter where we get more of the custom synthesis products. So those are campaign-based products, and they don't happen every quarter. So it's just a timing issue in that regard.
Okay, all right, Vinati. Appreciate you joining in. Thanks a lot for giving us color on the way the last quarter panned out and the way ahead as well.